please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back to our special show, Exchange Wars. We are discussing the cancellation of data provision by the NSE and the BSE to the SGX, the Singapore index, so that it could offer its product, its futures derivatives product, SGX Nifty. 6 months from now, the SGX Nifty, as we know it, will stop trading. What does that mean? What does it do to the image of India? What does it do to trading inside India? We are now probing those dimensions with Pramod Gubi, the head of equities at Ambit Capital. Pramod, thank you very much for joining us. From the Singapore end, how does this action look? Does it look protectionist?
Yes, I mean, in some ways, it does look protectionist, but then you couldn't argue with the government if its intention is to bring most of this activity onshore, either through the gift city route or otherwise. But at the end of the day, does it end up achieving that objective? I'm not sure, because there's always the possibility of other products being launched.
That was going to be my next question. Is it possible to manufacture an entirely synthetic derivatives product without using the data from BSE or NSE? Is that possible at all? Indeed, it is quite possible. I mean, for starters, there are ETFs which get traded on the exchange anyways, so they mimic MSCI India. These are MSCI India trackers, and in fact, MSCI India perhaps is a benchmark that's been benchmarked by a lot more funds in terms of money managed than Nifty itself. So to that extent, it is already existing. But somebody could launch another index and launch futures on those index in any part of the world. So as long as there are investors chasing those contracts, it's definitely possible to replicate that. What will be the underlying for such a synthetic product? The underlying would be the constituents, the stocks which constitute the index. Okay. Just like, you can take MSCI India, for example. You can launch MSCI India Futures, which is actually traded, but because of the availability of Nifty, because the volumes weren't much in MSCI India. So, for example, MSCI India could be a good guide to creating similar contracts. All right. Do you expect trading in MSCI India to be impacted because SGX Nifty is off? Possibly. I think we'll wait and see for the next few days. I mean, next few days is unlikely because you still have time till August. But maybe over time you might see pick up in volumes on those contracts. You don't see people who are trading on the SGX Nifty now shifting onshore to India, trading here and paying up the taxes? Yeah, I mean, at the margin, because on the futures trading bit, the returns are relatively muted as compared to those who invest from long term in cash equities. To that extent, the taxation makes a meaningful difference. But yes, of course, if there are other incentives provided, like from what we understand, the gift city, there could be some tax rebates. It is the dollar denominated to the extent you protecting the currency as well. So all things being equal, yes, the tax makes a difference. But otherwise, if you are providing some SOPs, then you might still be able to attract some volumes. Okay. How many countries find their offshore instruments so attractive? I guess the Chinese A shares are traded, but otherwise, are offshore indices very common? Yeah, indeed. I mean, the FTSE, for example, or the MSCI, for example, have a lot of contracts on them on various markets, and by that, I guess it should be possible for India also to see those, as long as they are on the liquid platform and attract a whole bunch of investors. Okay, so this would make us look like outliers. Yeah, sort of outliers, but at the same time, I think this industry keeps evolving. There's always a first time then. Okay. What about, I mean, just to repeat that question, would these volumes come to India at all, you think? I was given to understand that volumes on the SGX Nifty, on Nifty Futures, are almost double that of Nifty Futures in India. So some of that comes to India, you think?
Yes, it should. It should certainly move to India, of which now how much will depend on two factors. One is what is the alternative that the regulators provide in terms of be it the GIFT City option or elsewhere. And second is what is the alternative contract that comes up either in Singapore or any other financial hub in the world, which provides the same features as the SGX Nifty. So based on these two, we'll get a sense maybe in 6 to 9 months' time to how much of those volumes we can successfully pull into India.
Okay. The provocation we understand is that SGX said it would offer, or not said, actually offered stock futures, which seem to be setting the stage for pulling away a lot of volumes from India. Would you say that that appears to be the provocation? Are such stock futures traded for other countries?
Well, I don't think it's a provocation, right? Because in any case, in stock futures, you don't have any tie-up with the exchange.
Okay.
And the stock futures will continue to get traded in SGX even beyond August.
Oh.
So that was always the provision, and SGX took that opportunity.
Oh, I see.
I'm not sure if that is the reason for the.
Okay. You mean stock futures can continue to get traded even if the Indian exchanges didn't provide stock prices?
Yep, as far as I understand, because it's only the Nifty which is licensed by the NSE.
Oh.
The stocks themselves are independent of the exchange.
And it is common that other countries' stock futures are also traded in exchanges like SGX and FTSE?
Yeah, indeed. I mean, the Chinese A-shares, for example, trade in Hong Kong. So I guess there are several other examples. There are always dual listings in multiple exchanges, so I guess it's quite commonplace for that.
What do you expect will come in place of SGX Nifty? Is it most likely that Nifty will, the NSE will offer Nifty Futures trading starting maybe 6 in the morning or something like that, and maybe continue to trade after hours, probably all the way till 10 p.m.? Is that the likely replacement?
I think that's one of the factors, right? One of the advantages of SGX was, of course, the extended timings.
Yes.
But also the fact that it was dollar denominated, and also the fact that you could, I mean, it was in a jurisdiction where, which is relatively tax friendly. Now, by extending the timings on the NSE, of course, you are solving for one problem. But if you can address the other two issues, yeah, it's quite probable that Nifty trading can move into India.
Okay. What about the NDF market for the foreign exchange itself for dollars? You think that the volume on the NDF market also will shrink somewhat because that may have been related to exposures taken on the SGX Nifty, or is that more because of exposures on India, rupee exposures, and therefore the NDF market won't be impacted?
It'll be impacted at the margin, but I guess the NDF market is significantly bigger as compared to what the Nifty exposure was. And of course, the ultimate users are also various across corporate treasuries and so on. So maybe at the margin at best.
So how does life change from tomorrow? Well, not tomorrow, from 6 months from now?
I guess the 6 months is a long way to go. We could even see some of these products come up within weeks, because it doesn't take much to structure something.
The one in the GIFT City, you mean?
Whether in the GIFT City or, say, somewhere else, either in Singapore or Hong Kong.
These ETF-based synthetic products, you mean?
Correct.
Okay. All right. Then if that happens, perhaps, India would not have saved too much of volumes. What's your best guess, final question, Pramod Gubbi? Do volumes increase in India, or will the synthetic product just take away what SGX Nifty was getting?
So I guess there will be some increase in volumes in India for sure. And like I said, depending on what sort of products come up and what sort of incentives the local government provides here, the extent of that increase will be determined by that.
All right. Well, we'll have to wait and see. It will be an interesting war of the exchanges, as we have called it. Thank you very much Pramod Gubbi, for joining us with your insights. So it doesn't look like it's going to be a walkover for the Indian exchanges, that all the volumes that are being traded on the SGX Nifty, the Nifty Futures, that is, will come to India. It's possible some of it comes, but it's possible that a synthetic product replaces the SGX Nifty in SGX itself, or if Indian authorities act quickly, we could have a Nifty Futures getting traded in India's gift city, which is, of course, the place where Indian taxes don't apply. An interesting 6 months lie ahead, and maybe we will get an answer to it much earlier. We wrap up our special show, Exchange Wars. Stay tuned to CNBC TV18. News and updates continue.